We want to follow the yellow metal on a Fed approach, the cautious wait and see approach. The advantage of the cautious wait and see approach is to see the direction of the dance. So for every time market is taking or making a decisive action, we need to see it and play along based on the kind nature of the dance. So that's why we like that wait and see approach, cautious wait and see approach. So we look at it, how the movement, from the movement, you now track your direction. So now this is 45 minutes, and I decided to use 45 minutes instead of 1 hour for some reasons. We were going to look at so many things and we'll scale down quick. Now, let's look at the current floor and the current roof. This is the current roof of the market, and this is the current floor. Now, it looks like price has come to the floor and it has left. And he did that in a Asian session. He did that in Asian session. And what made that symbolic is that price returned here on a W structure, a strong reversal price action, showing uptrend characteristics. And when you look critically again, you will see, let's switch on to our line chart and see we had a breakout at this level. That breakout at this level, price had come back to retest that breakout. After first retest, second retest, and we had a final retest to that. And you can see on the line chart, you see a very sincere structure, very sincere structure, no gimmicks. So we had here as a supply roof, we had here as another supply roof, and a breakout of structure followed by a retest, and we attempted the current all-time high but failed due to impulse. And if you look at it again, we receive a structure here. There's a structural signal at this level. This structural signal here, everything that happens in the financial market, ladies and gentlemen, none is my influence. Everything is based on breakup structure. Every single thing that happens in the market it has something to do with structure. It's either you find a structure on a higher time frame or you find a structure on a lower time frame. But because I mean these guys are money managers, they are not acting on impulse. They follow a set of rules. There's a set of rules every money manager follow, from money management to emotional management. And you see what price have done there. You'll see that it follow exactly what I was telling you. There are a set of rules. So as we dive deep into this repeatedly, we discover a whole lot of things embedded in the trading market. And at the end of the day, we share these things for free. These things are worth thousands of dollars. And I can tell you for free, a lot of people do not have insight on how to trade the market. So it's not always calling for buy my course, buy my handout. Some of these things are strong intellectual property, but it's okay. So now the next thing we want to look at is, of course, we have seen a floor here. This price have also maintained a floor at this level, and we have seen it play out, creating a double confluence at that level. And on 45 minutes, price have returned to that level and have bought. So sometimes we use 45 minutes, sometimes we don't. The one thing for sure is that your time frame will give you a different result. Every time frame you chart, you get a different result based on that time frame. You can never get the same result. And there's one hidden truth. There is a very big difference between 3 hours and 4 hours. Especially if you're a structural trader. If you're a trader who believes in the structure of market, always switch to 3 hours. They provide different price action. And sometimes 3 hours will provide you a price action you will never see in 4 hours. You will never see it. So now The market is now setting itself up. We do not know if gold is coming to this level, but for sure, what I can see is that this is a roof, this is a new roof, and this is a new floor. So we don't know what it's about to do, but we will apply the first strategy: cautious wait and see. But from where price is now, it looks like good buying based on the structure of the market. It looks like good buying. Now you can see the structure, and let's get back. I feel good to see this structure, this retest, final retest after the first breakout. After the first breakout, you can see first breakout and a retest, and price have come back. And this second comeback, after taking this liquidity, might come back and take away this structure. So what I'm trying to say is that today is Friday, and you do not know if the big boys are coming to market today. If the market makers come market today and they decide that what they want to do today is buy, I am telling you, look at what they are going to do. If they return that today we're going to buy this market, they will break here and challenge the current all-time high. At least at the moment, if that is what they want to do, if they return today, say they will buy this market today, this is what they will do. This is what they will do. So except they don't want to buy the market, but if market makers return and we begin to see strong upswing in price, this is likely what you should expect. So let us not stress ourselves with so many line charts and so many, messing our charts up. And I think one more line, which is also an important figure in the price action. I want to take note of that. There is a breakout here followed by a retest, and you want to keep this in mind too. I like this structure, and that level. Let's give it a zone. So if price breaks out from there, then we know that we are heading up. So whatever that breaks price out of here, then of course this wouldn't matter anymore. This will not matter. So price will want to fulfill the distance of travel at this level. So if that happens, if we have a breakout from there, then you expect that whatever returns price here again, we likely want to leverage and travel fully. And a move into here will confront a current all-time high. Yes, a move into that. That's what you get. That's what you get. So I think the market has fulfilled. Look at what it has done. It fulfilled the price action at this level. When they return into this zone after that breakout, it has done exactly here and it's going back. And if it gets back here and break here, you add more buy position. You add your buy position so that you can go up. But while we are doing this, we must follow the Fed approach, the cautious wait and see approach. We must also see what the dollar index is doing. But I've looked at the dollar index. The dollar index is rejecting. It's hitting a daily resistance structure and it's respecting that structure. So despite the temporary rally, dollar might still have some downward side, looming. So if that is what the market wants to do, it's it's okay, but we must at all time follow that approach, as every negligence could come with a catastrophic consequence. And another thing we want to look at is yeah, we have seen how price respected this breakout and the price came back to retest it. That feels good. It feels good that the market is well structured. It feels good to see. And now the next thing I want to see is I think I should change the color to black. Then let's look at here. We have a descending trend line. Now we want to see if we're gonna get a breakout from this descending trend line. So if we have a breakout from it, you see we have a breakout already from it. So because we have a breakout from this descending trend line, it affirms the upswing potential at the moment, showing that this take correction is over. That's what it means. That's what it means. So they have taken profit and they think is enough. Enough is enough, and they go back to business. And when you look at the structure again from another perspective, you see that the market have done exactly what we expect. That is trading based on the structure of the market. And you can see how price have returned deep itself into that structure, and create series of floor for buy and the roof for sell. And on that note, you can see that the yellow metal have broken out from the descending trend line, and the market is going long. So anybody who is telling you to sell at this level, maybe we have to come to the comment section and explain. So please feel free, if you think this market is going to sell, come to the comment section and drop a strong line. It's we welcome criticism because we are learning. And we haven't ever said here that we have now become masters in the market. We always say we are students of thought, meaning we are learning. And you can never stop learning, because when you stop learning the financial market, that is when you start failing. So you see there's a clear breakout here and followed by a clear retest as well. After price forming this descending bearish channel, and you can see the price action. We came here, we bought, we returned back, creating a channel, and when we came back, we sold again, and we sold again. Now we are broken out from that structure. So what it means is that price might likely want to challenge this roof, and a challenge this roof, yes, might respect it because of what it has done before. It might go there and come back completely. This is possible, and maybe possibly take it up again and move up. But I think there is a likely probability that they will break this roof. There is a very high probability they will break it. There is a very high probability they will do so. So let's go back to our preferred time frame, which is a higher time frame, because I really do not want to stay in a lower time frame and they get carried away. So you need to step up your game to a higher time frame so that you have the picture of the market, especially the breakouts. A series of breakouts happen and you're looking for a retest and you're still in a lower time frame and you are being cut short because of your structure. So it's better we stay on a higher time frame. Now we have an idea. On a higher time frame, we broke out from a 4-hour descending trend line, and we saw it evident on 45 minutes. On 45 minutes, we already broke out. So what it shows is that we could be seeing liquidity. Haven't seen what price has done at this level. We broke out from this descending trend line. This is the first retest, and it came back for the second retest, indicating that it's going up here. So if that is what he wants to do, here remains a sell zone. So what it means is that as price comes here now, you will find here as a temporary supply roof. Yes, this is where it sold before. So you might find it a temporary supply roof, and you might also find it as a trap. That is if a lot of people understand. So they're going to look at aggregation. How many traders are seeing here as a supply roof? So it depends on the number. If the numbers are few, it will be respected. If the numbers are more, they will break the structure and return it to the current all-time high. How many people can put stop loss that will accommodate from here to here? Only a few people. So most likely you have your stop loss hit and price come retest the current all-time high and drop from there. So it's the vibe is given is a buy vibe. It's given a buy vibe at the moment. And if this is a new structure of the market, then we're expecting this guy to come into 3,600, 3,700, way from what we have. So if we are celebrating 3,500 current all-time high, let us don't forget that the current channel, which is a bullish ascending channel, is capable of shooting price into 3,700. That's another 2,500 people away from what we have. So the last thing we have learned is to follow a cautious wait and see approach and a structural interpretation of the market, meaning that the market is well structured. It never does anything without structural interpretation. So what it means and the lesson we have learned from yesterday and today is to allow the market to create a structure. Don't be eager to trade. Allow it to create a structure. When market create a structure, you will see the trade and you will take it and go home. It's as simple as that. Trading is not difficult. It's not difficult. But if you apply the wait and see approach, you can wait in a week. You can wait for 4 days and catch one day. Under wait and see approach is a Fed approach, Fed strategy, cautious wait and see. So you want to see what Monday, Tuesday, and Wednesday we do. You want to catch only Friday. So by then, Monday, Tuesday, Wednesday, Thursday have given you a clear directional buyer. You have seen series of dance in the market. Then on Friday, you have a clear vision. You now know whether you want to buy or you want to sell. And you now decide how many pips you want to take in your buy or in your sell. So you see, we not just only look at fundamental news, but we learn from what they are doing and apply it into our character. As our focus in our strategy is winning with character. So if we cannot evolve character-wise, then we are not serious in this space. So our evolving and is going to be on character, and we'll maintain it and keep it that way.